Here, the time right now in Singapore is 12:18 in the afternoon. Just a recap of what the market did on Friday, last Friday, I mean. And of course, we know that the market was pretty quiet, and the market actually opens traded mostly to the downside for most of the session itself in New York, and but it closed on a relatively stronger note. So this laid the foundation for a probably another surge forward. And we can see that despite the less than ideal economic data for the last 2 weeks, we can find that the US equity doesn't want to come down. Okay, so basically that means the market is still pretty bullish, at least for the immediate term. So there is a possibility here. I'm just saying there's a possibility here that the market may actually wants to go up further. And so if that's the case, we will have to make assessment for that. So if we're going to see an extended rally from the last October low, the top side for the Dow Jones is about 35,500 thereabout. However, the Dow Jones right now, because the market has not been able to break out of its relatively narrow range of trading for more than 2 weeks, with a bottom at 33,000 to 33,581 and the top side of 34,334. The market has not been able to break out of this very narrow band of prices for more than 2 weeks, and there, of course, it's not indicative of enough whether the market will be able to tell us where it wants to go. I think the signal will not come from the Dow Jones. Dow Jones is right now a follower rather than a leader. But if the market should break down to the downside, it is also a possibility, because that means the market is doing a corrective pullback here, and the downside, at least for the minimum target, is 32,200. So we can see that there's a bracket of prices that I've actually anticipated. So I have two scenarios here. If the market breaks up to the upside, top side is 35,500, and on the downside, if the market breaks to the downside, the minimum target is 32,200. So we have to see where the market will take us. Okay, so like I said, the Q is not going to come from Dow Jones. It's likely to come from other places. When we look at the S&P 500, S&P 500 does appear to be a little bit more bullish than the Dow Jones, because this structure from the mid-October low appears to be incomplete. And if this is the case, the market can stabilize at 4,000, which there's a possibility, because right now we are seeing a three-wave pullback. And if markets can stabilize at 4,000 without a meltdown, then of course there is a possibility market may actually decide to extend higher. And if that's the case, I think my target is around 4,370 thereabout. Top side is about 4,530. So between these two prices, the market may we may see the re-emergence of selling interest here. However, if the market decided to melt down, I mean to sell off, okay, then of course we are seeing a different structure altogether. And that is also a possibility, although at this moment in time, it's not very, very high in my opinion. I think the market wants to go up for the simple reason that despite less than ideal economic data for the last 2 weeks, prices remain relatively firm. Yes, market do pull back a little bit, but the pullback is very, very corrective in nature. Now, this index here has a different structure in my opinion here. The rebound from the October low appears to be complete at 12,881. So right now we are seeing a little bit of a corrective pullback, and if this is just a corrective pullback, that means there is still the possibility of another extended rally. And if this is the case, a re-challenge of the 18,881 is still very much a possibility. We will have to see how the structure unfolds. If the market stabilizes at 12,000 and wants to go up, then of course the bullish scenario would take precedence. However, if the market sell off below, let's say 19,000, that would be a different structure altogether. It's telling us that the market, okay, in terms of symmetrical pattern, I think it has already completed. Okay, so it's getting ready to resume its larger degree downtrend. So that is the other possibility. Right now, we're getting a little bit of a mixed scenario based on the structure of the price action for the three major equity index in the States. Dow Jones is basically flat. S&P 500 appears to still have enough momentum to take it higher, whereas the Nasdaq appears to has also hit target and is getting ready to resume its downtrend. So we get very, very different conclusion based on the structure of the price action for the three main equity index. So we have no idea which way it's going to go. Now, when we look at Asia, the Hang Seng has been rallying from 14,600 thereabout to as high as 22,700. So this is a big move, and the market has been pulling back in a very corrective three-way manner. And this morning it has actually come down to test the 20,800 levels, and it does appears to be stabilizing. If this market see a surge, I will not rule out the possibility it may extend higher towards the 4,008 levels. Okay, so the structure is very, very different from the Hang Seng Index relative to the US equity indices. So we will have to take it with a different perspective here. Okay, over in the Shanghai Composite, we are also seeing something very similar. Market has a three-wave rebound, appears to have difficulty crossing the 3,310 levels because the market actually went down, retest again last week at 3,309. Okay, but missing out by 1 point and then come back down. But this can see this move is also three-wave, so there is a possibility that because of the rather relatively aggressive rise this morning, there's a possibility market has hit the bottom and is getting ready to challenge the upper limit. So if that's the case, another challenge of 3,310 is a possibility. If that level is taken out, then the market may actually go up to 3,375 in my opinion. So that will complete the three-wave rebound. Okay, so what happened after that, we will have to see. Okay, I think it will be largely dependent on what Wall Street is going to do. Okay, over in the Nikkei 225, you can find that the market is also doing very little for over the last week. Market have a high of 27,821 and then started to stall. But this pattern from the low of 25,661 appears to be unfolding in a potential five-wave rally. If there's a case, taking up 27,821 is a possibility, and the market obviously have two targets here. One is 28,200, the other one is 28,500. The latter here seems to be more relevant. So if this is the case, we can see a more complete five-wave rally here, and that could mean something. Okay, it could mean nothing, but it means that there is a five-way structure. Okay, normally a five-way structure in this pattern looks to be a little bit more bullish than bearish. Okay, now when we look at currencies, okay, maybe we look at the dollar index first. Dollar index on the daily time frame, okay, appears to tell us that the dollar may have hit a bottom at 100.82. Okay, and this is getting ready to rebound. The first hurdle you have to cross is 107. If the market can clear 107 and stay and close above 107, this market here in terms of dollar is likely to resume its larger degree uprun. Okay, although in the daily time frame right now the dollar is in a bear trend, and this can only be seen as a counter trend for now. So the immediate barrier to higher prices will be 107. We have to watch this market as it moves. Okay, so there is a possibility the market, the dollar wants to go up, but I think this is just for time being a corrective rebound, because it's all I can tell you, because the larger degree, the larger market bias is to the downside for now. Okay, when we look at the dollar strength, we can also see the same thing, like a three-wave rebound in the dollar versus the yen, and the market capped at 135.12. Okay, so we can see this high was actually traded last Friday, and the market pulled back a little bit. Now on the way, as the market closes on Friday, it shows us a reversal pattern. This is a reversal pattern. If the market takes out the low of last Friday, which is 113.90, okay, then the market is likely to trade much lower, because we have a three-wave rebound, meaning to say very similar to what we saw in the dollar index itself. The dollar is currently rebounding, and it may have already hit a barrier in the dollar yen at 135.12 on Friday, and it's getting ready to resume its larger degree downtrend. We will have to see if this is the case, right? And over in the currencies, we can see that although the currency has pulled back on the basis of dollar strength, but we are seeing something quite different. On Friday, we have a reversal pattern on the daily time frame in the euro versus the dollar. That means the market is likely at least in the near term, to rebound. The first barrier is 108. Okay, so we have to see whether 108 is going to be able to cap this run. Okay, so if the market pulls back somewhere to 106.70, maybe you want to consider if you want to take up a long position. I'm already short the dollar. I'm already long the dollar. I'm short the currency, so I will have to consider whether I want to buy back my short currency position relative to the dollar. Okay, the one that I'm actually short is actually the Aussie dollars. Now it looks like I may have to cover my Aussie short position because it does looks like the market has found a bottom at 0.6812 on Friday. Market is getting ready to go up. So if the market can go up to, let's say, 0.6920 to 0.6950, then I think if there's a reversal signal here, I may add new short position, but again, I will have to take it from there. Okay, I am looking towards further weakness first. Okay, although if the market continue to edge higher, maybe I have to cover my shorts. But for now, I am a little bit more aggressive. I want to add on to my short position, somewhere between 0.6920 to 0.6940. 45. Okay, if you give me a chance, I will probably add new positions to my shorts. Over in sterling, the dollar strength story remains. Okay, and if the market can rebound back to 120.90 to 121.35, that could present a selling opportunity. Target is at the bare minimum 117.80. Okay, 117.80 is the minimum target. Over in dollar Canadian, we are seeing that the dollar has also rebounded in a three-wave rally, top up at 135.37 on Friday, and now we are seeing a bit of weakness in the daily time frame. Do we see a reversal signal? Yeah, we saw a reversal signal, but conditional on it triggering the sell signal, which is to take out Friday's low at 134.44. So if the market can take out 134.44, then we have a confirmed sell signal. Until then, the market is telling us that this market is just a simple rebound, and so it's a bit of it can be either bullish the dollar or bearish the continued strength in the dollar, or the maybe the dollar has topped up in its current rebound. So both scenarios are currently valid. So we have to depend on the price to tell us exactly how the market may actually unfold. Over in the oil market, we can see that oil has actually come down to $75.32. And this is getting to be very attractive to take a long position. If the market can dip a little bit further, let's say to $75.45, or even better to test $74, then a buy here doesn't make a lot of sense because my risk reward will be so low. I can either put my stop below $72.25, or if your risk appetite is a little bit wider, put your stop below $70 and take this market higher. There's a good chance market will go up to $83.70 to $86. So that is the trade-off here. But if you want to stay out of this trade, because right now the market is still in a very largely consolidation kind of period. So if you don't want to trade consolidation, maybe you should just sit this out and watch. Okay. Over in precious metals, we saw a dip down to $1,817.70 on Friday, and then the market closed with a reversal signal on the daily time frame. So gold, in my opinion, is getting ready to surge, or at least to rebound, not surge, to rebound. Whether it can actually challenge the high here before the market go down by more than $100 per ounce, it remains to be seen. But I think the first barrier will be 1,890 for the spot gold. Okay, so in the intraday itself, the market can actually pull back, okay, to somewhere around $1,834. I think that could give us an opportunity to buy, because the market has not pulled back significantly yet. But if it does, the $1,834 does look like a great level to add position, and then put the stop below 1,817, okay, and to go for 1,890. Okay, that will be a relatively good trade-off here. So on the silver market, is the same thing. The market has hit a bottom at $21.18 thereabout, and rebounded. And then on the daily time frame, we also saw a reversal signal in the daily time frame. This is a hammer. So this is a classical reversal signal, and the market has we are waiting for the market to take up last Friday high, which is this high over here. If the market can actually trade just beyond $21.81, then we will get a confirmation. But if the market comes down first, then we want to buy somewhere around $21.55 and take our chance, put a stop below $21.17, and to exchange for the possibility of a challenge of $22.60, which is this high over here. This one, $22.59. Okay, so it's a good trade-off here. So you can consider it. Over in crypto, we are seeing quite a bit of exaggerated move. Market went up to 25,252 last week, and then pulled back to 23,344 before attempting to challenge this high one more time and fail at $25, $25 and 80, $25,180 and then pull back. So there's a possibility the market can actually extend lower. If it does, 23,274 or 275, start to look out for a sign like this. This is a reversal signal. If we see this in this bracket of prices here, that will be so much more powerful. But in the meantime, the market, of course, have the possibility of not even retracing further and then immediately gun for the 26,300 levels. This will be my immediate target. Okay. Over in Ether, you can see that Ethereum also having a three-way potential pullback here. The target ideally is to buy somewhere near $1,614. But because there is an appearance here of a reversal signal, and if the market started to rally from here, then of course the market will not come back to the ideal price for us to buy. And if it's the case, I think the market may actually go as high as $1,812. So this will be the immediate target for this potential rally in the Ethereum here. Over and Cardano, we are seeing very similar structure relative to the Ethereum. We can see that the market is pulling back, but unfortunately, we are seeing a reversal pattern on Sunday, and this could lay the foundation for an immediate surge forward to somewhere around the 0.454. This will be my immediate target. Ideally, we want a price to come and test the 0.383 to 0.373. That will be a better place to actually go into buy. But in the event the market doesn't comes down, then immediately, if you are holding you're holding on to existing long position, maybe you want to consider putting your profit taking point at 0.454. Okay. Over in Solana, this market doesn't appear to want to wait. It has already punched above the previous high here, and the market now, this one I will have to erase, is no longer bearish. It is now very bullish as far as this market is concerned. So there is a real risk based on the daily time frame. This market may actually immediately surge forward and go all the way to $38.50. Okay, so that is the risk in Solana. Solana right now, it seems to be very, very bullish. So do watch out the different pattern that is unfolding in crypto as well. So remember, tonight there is no market in the US. They are closed for the President's Day. So the market will be very, very quiet. So maybe you can take a break and try not to hold large position going overnight. Okay, guys, this is all I have for you, and I'll see you tomorrow. Bye-bye.